Realtor with Coldwell Banker Realty, and I have my special guest, or my co-host. We do have a special guest, but I have my awesome co-host here.
Derek Alexander, also Realtor with Coldwell Banker Realty.
Awesome, and we are here coming to you live on our radio broadcast, 1580 The Praise, a Gold Chip communication station, and we have an awesome guest with us here, Joe Salk of Salk Mortgage Group. He is the mortgage lender broker extraordinaire.
Oh, too kind,
yes,
kind.
But it's true, I have so many other accolades to say about you, because I met Joe back in 1999 in my new build days, and we've stayed in touch ever since.
Yep.
But we'll have some great real estate news you can use about the mortgage industry, because you cannot buy a home without having money and financing to buy the home.
So we find the homes and he does the loans.
He does the loans.
Absolutely.
He is the mortgage guy. He is the money that makes it happen.
There you go.
But yes, we're coming off of an exciting weekend, Super Bowl weekend. Joe, did you enjoy the game?
I didn't know if I enjoyed the game. I mean, it was a little boring.
Yeah,
exactly.
Yes.
But it's always good to watch the ads and eat food you probably shouldn't be eating.
Exactly. Yes. Yeah.
The number one cheat day.
Exactly. Yes. Get to watch the ads and watch the commercials, and there was a football game on.
Yeah.
Was that really a game? Yeah. And I know Joe had a good conversation about some of the ads on the financing end.
Yes. The mortgage broker industry, for the first time ever, had some ads on. Find a mortgagebroker.com, and a couple other lenders had ads on there, so it was exciting to see on the big stage.
That's true. That's right. Every end of the spectrum, because they know the real estate market is hot.
Exactly.
So why not talk about financing? Because without financing, you're not buying a house.
When you have your audience right there, go ahead and capture them.
Exactly.
Absolutely.
Water filling their face up with nachos.
Right, I know. Or hey, they don't have a good place to watch the game, so you need a house.
There
you
go.
go.
Contact me and Derek so you can watch the next Super Bowl game in your brand new house.
There you go.
Thanks to Joe, who will help you finance.
That's a good way to put it. Excellent way to put it.
Yeah, everything.
Absolutely.
Very good. So with our real estate news you can use, there's some really good information and updates that Derek has on his real estate hot sheets.
Absolutely. So like always, we always want to open up our show just talking about the current market activity going on here in Central Ohio, the metropolitan area here. So some of these numbers that I'm going to talk about is talking about the numbers within our MLS database. Again, just talking about Central Ohio area. So the total active listings right now is 1,464 properties.
That's it.
That is extremely low.
And that's over Central Ohio.
Over Central Ohio.
And how much is normal?
Right, exactly. Normally it's like over 5,000.
Yeah.
I mean, a normal market maybe 3,000, but in a normal market, I mean, we are at an all-time low. We have like less than 1 month inventory of homes to survive.
Yes.
So,
and we were having a meeting this past week and talking about the mortgage crisis boom that happened in '08, and that influx of properties. That was about roughly 20,000 properties that you can go. So buyers had their pickings, but right now, it's very slim. It's very slim. And we're going to talk about opportunities to purchase other ways instead of doing the existing home market, because it is slim. So there are ways that we could branch off and find you another property.
that's true.
So just talking about that shortage, it's very important to talk about the affordable housing shortage, because with properties exceeding with their values, they're going up at a rapid rate. It's leaving out, the little guys, with the properties at $180,000 and below. Back in 2019, that took up about 48% of our market share. So, and last year, again, with the properties increasing in value, that only took up 33% of our market share. So you can see that properties at 180,000 and below is slowly becoming obsolete.
Non-existent.
Yes,
Exactly. It's
obsolete.
not there.
So people who purchased their home maybe 3-5 years ago, I mean, you're seeing about 10 to 20% appreciation per year. So if you bought a property, say at $80,000, right now you could probably sell it $140,000, $160,000.
So you need to call us. We're looking for sellers, and Joe is here to talk about financing and what does that look like in terms of your equity position You just made 20%, 30% equity in 3 years. What do you do with it?
Right, exactly.
You transfer it to your next house. And Joe will talk about how you structure your financing to take the equity from your home and place it as down payment for your next home. And with interest rates, I mean, they're half of what most consumers received back in 19 and even in the year 2018, the rates are 0.5%.
Yeah, historically, rates are the lowest they've ever been right now. And will that continue? Most likely. There is predictions that the second half of the year, June, July, we'll start seeing pressure on rates to go up. But historically speaking, low interest rates where you can take advantage of buying a new house or even refinancing.
That's a good point. And Joe, you've been in the mortgage industry for how long? I don't
20,
want to
since 1993.
93. So since 93 year to date, have you ever seen, I know you said historically low, but have you ever seen rates this low?
No, never this low. And with that being said, really the highest I've ever seen rates was at 8.875. And that was like in 1994. So we're in a good stretch of low interest rates, which is great for home buyers to take advantage of buying or saving money even by refinancing.
That's true. So as we say, the cost to borrow money is extremely low. It's
very
cheap.
low.
Cheap.
Very low. Yeah.
So do not let the sales price and sticker price scare you, because Joe can find a way to make the payment affordable for you.
Yeah.
So.
And to Derek, to your point, there's something that a lot of people talk about is, if I sell my house, I have all this equity, is you don't have to put it into your down payment of your new house. You could actually use that either if you want to save it or maybe pay off some debts, and then that way you might say to yourself, hey gosh, this is more affordable because I just paid off an auto loan, student loan, credit card debt, and you use that equity and it makes the new house more affordable.
And that makes more sense. So one of the good things that you do, I mean, you do several great things, but when you speak to your clients, you go over a mortgage consultation package to figure that out. So with the equity, Derek and I will work with you as a home seller to figure out pricing, your equity position, how much you owe on your home, how much the house is worth. The difference is your equity. When you meet with Joe, he's going to figure out what makes the most sense. Do I use all of my equity for down payment on the next house, or do I pay off debt? So talk to us about what you do when you have a mortgage consultation.
Yeah, so normally what I'll do is when somebody, with COVID, we fill everything out online. So you go to my website, salkmortgagegroup.com, and they fill out their application. Once I have that, that kind of gives me an idea of where you stand financially. And then I'll look at it and say, okay, what's your goal? And some people have goals, other people don't. And then I might give some suggestions saying, well, if you want to qualify for this much of a house, you're going to have to put this much of a down payment down, or maybe you have to pay off some debt and put less money down. And then we'll kind of I like to go over a couple different options, just different sale prices and products, because there's three major products out there. There's a VA loan if you're a veteran, an FHA loan, and a conventional loan. And you guys can speak probably better to me on the seller side and the buyer side which product is most desirable. But in today's market, I kind of know the answer.
What's your answer, Joe?
It's the conventional loan.
Why do you say that? Why is conventional desirable?
Because you can tell me more, but the FHA and the VA loan is the best loan out there. If you're a veteran, it's the best loan.
Thank you for your service.
FHA is a great loan, but it comes with more fees and more regulations.
That's good to know.
With the fees, you have monthly mortgage insurance and an upfront mortgage insurance. And then with FHA too, if anything's broken in the house, it has to be fixed before closing.
No chip paint and issues with a hot water tank, if the pressure relief valve is not there, had issues with that. And that's a good point. So if we go back to not just the property conditions, but fees, because we have some sellers who look at offers that come in and they discount an FHA borrower versus conventional. FHA is a great deal. I mean, we sell quite a few FHA deals, but when you look at the difference of cost to borrow money, interest rate might be a little bit higher for conventional, lower for FHA, but Joe made a good point. Fees, there's upfront MIP and monthly MIP that stays on forever.
Right.
So Joe will go over those options to see what makes the most sense financially.
Yep.
That's a good
So
point.
what is the ideal credit score for your average buyer?
There's I don't really have an ideal credit score, but where you get your loan through, whether it's FHA, VA, conventional,
Okay.
you probably, FHA will allow you, with my investors that I work with, to a 600 credit score.
Okay, that's
Okay.
good to know.
Most lenders require on conventional and VA 620.
Okay,
Okay.
so it's a little bit higher scores.
So- So from that standpoint, you can, that's kind of not the ideal score, but that's a score that will allow you to get financing.
To get you in the door.
Get you in the door and go through the process a little bit more with ease and pricing the interest rates and loan programs a little bit better.
Absolutely. So just talking, with, COVID happened, in 2020, and now 2021 is upon us. And, as of right now, they're talking about in March that, people, if you're renting, evictions are going to be lifted. And also too, if you were in forbearance, if you couldn't pay your mortgage because you lost employment, or you might have lost a significant other who was the breadwinner of the property, and now you can't afford it now. So talk a little bit about that, the expectations coming in March.
Yeah, so the biggest thing is with COVID is the lenders are looking to protect themselves.
Of course, first and foremost.
Yeah, and there are, especially if you're self-employed,
Okay.
it's a lot more rigid than it was if you were not self-employed.
Okay.
So if you're self-employed, we got to show profit and loss statements. We got to show bank statements to show that all this, your income hasn't been affected by COVID. But to your point, Derek, yes, if you're in forbearance, you have to get that loan out of forbearance. If you're gonna purchase a new property, that has to be brought up current.
Okay.
If you're gonna refinance a property, that has to be brought up current, and we gotta document that, this was your own funds
Yes.
to do this.
Right.
Current. That's good to know. So just because you're in forbearance, you could make your mortgage payment for several months, there's still a cost to pay.
Right.
What you were forgiven to pay, you still have to catch it up. So
Yeah.
that's a good point.
I
So
always say, there's no free lunch.
there's no free lunch. I know, and they kind of build it up, which
Nothing's
I'm
free.
great that they offer this assistance for those who lost their job, lost their income. But as Joe said, the lender wants to look at, the mortgage bank wants to look at themselves first to protect their asset.
Right.
So they want their money back. So
Yep.
those who are in forbearance definitely have a conversation with us, and we'll connect you with Joe so you can figure out financially what do you owe to be able to sell your home.
Yeah.
Because
And that's something that we look at too, because when you fill out an application, you get to actually pull your own credit report, and I will go over the credit report and say, on the credit report, it will stipulate that you are in forbearance.
okay, so
Okay.
let's say that
Yeah.
report. And does that affect someone's score? So,
It shouldn't affect their score,
Okay.
but it will affect their financing. So that's something that a lot of people went into forbearance because they're like, well, I wanted this habit, and they didn't really know how it would affect them.
yes.
So if you did by chance do that, you probably want to get out and start making those payments.
Because it makes a difference. So
Yeah.
that's good to know. So
Absolutely.
those who are in forbearance, give us a call. You can contact us. You can reach out to Joe, and let's just go over the mortgage consultation package
Yeah.
to figure out what you're able to do before you do it.
Yeah.
So not that all hope is lost, but we want to figure this out, peel back the layers, and see where
Right.
you're at.
So real quick, talk to the listeners who are in that situation, whereas, hey, I can't make my mortgage payment right now, but they don't want to sell. Are there some avenues that they can take to keep the
Yeah,
property?
their best thing, Derek, is to contact their servicer,
Okay.
their lender, and talk to them.
Okay.
Because at the end of the day, the lender doesn't want to have the property.
Right.
They want the customer to stay in the house, and they'll work with them generally to help them
To
out.
maintain the house. That's good.
Yes. So contact your servicer immediately.
Yes, do not wait till the last minute. So that's good.
And I will say something about a servicer. Your servicer is who you make your payment to. The investor is either Fannie Mae or Freddie Mac,
Okay.
VA or FHA.
That's good you
Okay.
broke that
Or
down. Okay,
Yeah.
okay. So servicer, investor who carries the paper, who
Right.
carries the mortgage, who you owe the money to.
Make the payments to.
Very good. And then you also mentioned too with the mortgage broker versus one of the national lenders that's out there. So talk to us about your company. And,
Yeah.
Yes.
Yeah, so to that point, let's just talk about a conventional loan.
Yes.
So a conventional loan is either Fannie Mae or Freddie Mac generally. That's 95% of the loans that are done out in America are done through Fannie Mae or Freddie Mac.
Okay.
You do have some what we call as portfolio lenders that service their own loans.
Okay.
But generally, you start off with Fannie and Freddie, and you start off with a loan officer like myself or a mortgage company. Now, everything else is the minutia in between. So how you get your loan to the finish line, in between is a mortgage servicer.
Okay.
So Fannie and Freddie don't service the loan, they just are the investors on the loan. And the unique thing about Sauk Mortgage Group is I've been doing this for a long time, is literally I looked at this and I tell my clients this, is I'm the owner and the only salesperson.
Very good.
So I cut out middle management and I pass those margins on to the customer.
That's good to know.
That's good.
So one-stop shop.
Yep.
You make the decisions, and it's your decision to make based on costs and fees and things like that.
Yeah, because from my standpoint is, I know rate is very important to everyone. It's not the only thing, but it's important. And being able to cut out a lot of overhead,
Yes.
you get that savings. So this is another good story I tell people.
Yes.
Is
We love stories.
Yes.
Yeah, like story.
So every Rocket Mortgage is a great example of this. So Rocket Mortgage, a lot of people know that they have what they call their retail side,
Okay.
and on the right hand side, then they have their wholesale side.
Okay.
Okay. So a lot of times people say, well, Joe, why would I just go to Rocket Mortgage instead of going to Sauk Mortgage, who's gonna sell it to Rocket Mortgage? So as a broker, I have 15 different places where I can sell your loan to.
Yes.
There's more than that, but I'm not signing up with more than that. And they said, why don't I just go through Rocket? And I said, well, if you go through Rocket's retail chain, they're paying for the brick and mortar, they're paying for the computers, they're paying for healthcare, they're paying for 401ks. When you get a loan through Sauk Mortgage, it goes right to Rocket, and you're paying only what Sauk Mortgage is paying, our small operation. So you get a better price.
That makes sense.
Makes
It's
a
all
lot
about
of sense.
pricing. So
Yeah.
when you look at a brokerage versus a big box chain retailer in terms of lender and mortgage bank, you're able to break it down in terms of cost, and there's more to the rate or more to the price than just the rate, like you just said.
Right.
Closing costs.
There's closing costs, and there's cost to close a loan. So when you compare shop lenders and brokers and see what's out there, rate and cost to close your loan. There's a cost of doing business. So how do you talk to your consumers about your closing costs and what to expect?
Usually what I do, Danielle, is after the consultation, I will send out a breakdown of programs of, okay, here's an FHA loan. Here's a conventional loan.
Good.
Here's a conventional loan with, let's say more down payment.
Yes.
So they can see it. Or if we just know we're gonna go with a conventional loan, I'll say, here's a conventional loan at one price,
Yes.
and here's a conventional loan at $10,000 more. Because for every $1,000 that you put down, it's probably only gonna change your payment $4 to $5 a month.
That's huge. So that's the note-taking session. So one more time. So that one more time,
Yeah,
Joe.
for every $1,000 that you put down, your sale price or mortgage amount changes, it's really your mortgage amount, will only change your payment about $4 a month.
That's huge.
Huge.
So as
Huge.
Joe was talking about the equity in your home, using it for down payment, using some for debt payoff. When you look at a $10,000 difference of cash out of pocket versus debt payoff, it's a difference of $40, maybe $50.
Right.
So Joe will do a good job of exercise, or go through the exercise of saying, here's what makes the most sense, and show you. And that's
Right.
something I love about your program. You not only talk with them, but you do a video.
Right,
And your
right.
video goes through tab A, tab B, tab C.
Right, exactly.
And then you explain it, and it's like he highlights, and here's what he's talking about. So you, the consumer, will see it, and you,
Yes.
the consumer, make the decision, not
Yeah.
Joe, and not your girl.
And because of COVID, that's
Yes,
one of the,
that's way to go.
you know,
Okay.
I
You were
mean,
doing that before COVID
yeah,
too.
yeah. But it's, we used to do a lot more face to face
Yes.
and break it down, and now, we just can't. But so that's why we like to use video, and we'll even do a phone conversation, and I can do a screen share
Oh, that's
where I can send you an email and go over all the numbers. Because
Yes,
trust me,
yes.
you get these numbers sometimes and you're just
It's fun.
yeah.
No, it's like, what are they talking
Yeah.
about? I don't
Right.
get it.
Yeah.
So when you see it and explain it and have video and point click, it's right there.
Yeah.
Right, right.
From A to Z, you're
Yeah.
covered.
And I can attest to that too. Like some of our clients that we've worked with, they love the way how you break it down and just make it plain for them.
Yeah.
Because it is for them. They look at these numbers and look at the percentages. They don't understand it.
Right.
But the video and the breakdown that you do provide, it's
Makes it seamless.
110%.
Good.
That's good.
Good.
That's good. We talked about refinance, so that's the buzzword. A lot of people are like, hey, I should refinance, because we talked about interest rates are low and your rate for buying versus your rate for refinancing, those two different rates. So talk to us about, when is a good time to refinance?
Sooner than later.
Okay, there you go. Simple as that. All
So,
right.
and you know, it was kind of interesting is, you know, in the past, we would always say, maybe don't refinance if you're going to move within the next year.
Okay.
Okay.
Now I've almost gone to the clients and said, you know what? If you're paying 3.75, 4%, 5% as an interest rate, you might want to refinance. If you don't buy, you're ahead of the game.
That's good.
If you buy, because of the lack of inventory right now,
Right.
you might not be able to buy for 6-7 months.
That's good to know.
That's true.
Okay.
So from that standpoint, I say buy now.
Mm-hmm.
Or if you are going to buy and you have equity in your house,
Yes.
maybe you do what we call, there's two types of refinances, what we call is a rate and term refinance, where you just refinance the balance.
Okay.
Okay.
Take what you owe and refinance and start.
Exactly.
From there. Okay.
Or you can do what we call as a cash out refinance,
Yes.
where you pull the equity out of your property.
Mhm.
So you can use that maybe to pay off debt,
Yes.
maybe to use it for your next house.
Mhm.
And then we can, you know, see, do you qualify for two
Carry
houses?
both
Right,
loans. Okay.
And how much would that owner get if they decide to do the cash out?
They can go up to 80% of the value of their house. Derek.
Okay.
That's
okay.
good to know.
Mhm.
So if you're looking at buying a house or getting a house built, so Joe can speak with you and go over the cash out refinance to see if that makes sense, because most builders want to make sure you're non-contingent. When you
Mhm.
sign a new build contract, they want to make sure your house is listed and sold,
Mhm.
then they'll start construction for your new home. But Joe can go over the math to figure out, do you qualify to carry both, satisfy the builder's contingency, and then proceed with having your house built.
Absolutely.
That's good to know. So there's so many solutions and options. It's just a matter of calling us to figure out, what are you looking to accomplish?
Yes, yes.
What do you want to achieve? What are your goals? And our job is to help you get there.
Yeah.
Absolutely. And give you all the options that you need.
That's
Yeah, it's basically, I'm sure with you guys, anytime you meet with a client, it's a puzzle and you just have to put it together.
Yeah,
Exactly.
right.
That's a good way of putting it. Let's put your puzzle together. But you have to disclose to us all the pieces of your puzzle.
Yes.
So you can't hold out information, because a lot of times consumers think, okay, maybe they won't see that I am in forbearance. So I'll tell them, hey, let's get this thing going and let's make this happen. And oh, I didn't know that.
Yeah. I've told people this is, as a loan officer or somebody doing a loan for somebody, we know more about their situation
Mhm.
than anybody else that they deal in their financial, whether that's a stockbroker, their CPA. We get so much information, and some people get a little nervous about it,
Mhm.
but it's kind of like, you know what, it goes in one year and out the next year. All I want you to be able to do is buy and go on with your life.
And
Right.
here's the
Get
reason
the
why.
keys.
Yes. And then that's a good point. So talk to the listening audience about the documents that you require and why you require so many documents.
Yeah.
So it's kind of simple. You want to buy a house and someone's
Right.
loaning you money to buy the house.
Yes.
They want to be able to trust you. They don't
Yeah.
know you. So the
Right.
only way to know you is to ask these questions and see, who are we dealing with?
Yeah, and there is a lot of documentation that you have to have, like
Yes.
pay stubs, bank statements, W-2s. Make sure that we have all of them. We have to document all of them, because
Yes.
ultimately those investors that we talked about, Fannie Mae, Freddie Mac, VA, FHA, they're gonna come back and say, when they do an audit on the file, they're gonna say, well, wait a second, this is missing.
Mhm.
And if that's missing,
Mhm.
that servicer has to keep the file versus, so they don't make the money on it. So that's why it's so arduous.
Oh,
Gotcha.
yes, it's
Mhm.
documentation. So listening audience, do not get offended if they're asking for documents. It's a purpose. It's required. It's a requirement. So
You
they're
got it.
covering all aspects of this investment to make sure they're making the
Yes,
right
yes,
investment.
yes.
So
Yes.
I think it's so important to understand that. So it's not just picking on you, it's a requirement for the
Right,
lender.
Yes. And it can be an overwhelming process, but again, that's why you have myself and Danielle
Mhm.
to be able to help you along that process.
Right. Something else too, Joe, with the market, we had talked about supply and demand. There's, a huge demand and very low supply. So that makes a bidding war. We said there's less than 1,400 homes on the market. As you drill down, there's even less specific area, things that you're looking for. So talk to us about some of the offers that you're seeing coming in terms of appraisals, and what's some of the things that you can see buyers waiving to get their offer accepted?
Yeah, so, well, you probably can speak maybe better than that, but yeah, you do see appraisal waiver.
Okay, what does that mean exactly?
Yes.
So appraisal waiver is, okay, or appraisal gap waiver.
Yes.
If the house, we offer 200,000 and it comes in at 190,000, the lender uses a lesser of the two.
Yes.
Okay.
The appraised value or sale price, whichever is less. So in this case, if it's $10,000 less, they're gonna base your down payment off that 190,
Okay.
and you have to make up that gap of $10,000.
That's
Yes.
good to know.
Yes.
So-
your down payment plus the difference plus your closing costs. There's a plus.
Yes.
So this adds up. So as consumers, we know is you want the highest and best, but as agents, you have to guide your clients and help understand this and explain it, and talk to the lender first before you put the appraisal gap waiver in that contract. Because as a listing agent, we want to make sure your buyer has the cash.
Exactly.
Right.
So talk to us about that, Joe. So should we know that up front?
Yes. So when somebody's gonna make an offer, and I've worked with you two enough that we know is a good agent is gonna have a great relationship with their lender
Yes.
and
Yes.
say, hey Joe, we're gonna do an appraisal gap. Does
Should
the
we do
client have enough money?
Exactly.
And
Can
I'll
you
be
please
like,
verify that?
Right.
yay or nay, because
Right.
the worst thing you do with anybody, you put it in,
Yes.
and then all of a sudden
Right.
Yes.
it doesn't come in, and you're like,
Now
whoa,
what?
where's
What's
this
this
money coming
Right,
from?
exactly. Where's the cash coming
Yeah.
from? Like
And we find out through the documentation.
Yes.
Exactly. So when the lender asks for documentation, that's the reason why. So that you can go in with the position of power, make the right offer, get it accepted, and verify you have the difference to cover the appraisal
Yeah,
gap.
and that brings up like a conversation because you might not have the money, but maybe you can get a gift or
Yes, good point.
through
Great point.
work, maybe you get a bonus through work, something like that. So basically, it all comes down to communication.
It's so important. So, listening audience, it's important to have a good relationship with your real estate agent. Real estate agent's great to have a relationship with your lender. You have to ask these questions because
Yes.
you want to know what you're dealing with.
Yes.
So that you don't get burned and you don't have to cancel out a contract because you didn't have a conversation up front.
Absolutely.
So speaking of communication, I know we're coming to an end. We've had so much good information. We probably have another half hour, 45 minutes of things we can talk about. How do we reach you, Joe? So let's
Yeah.
talk about getting in touch with you.
Yeah, so best two places, the
Yes.
website,
Yes.
and I always tell people www.sauk.mortgagegroup.com, saukmortgagegroup.com. You can go there. You can see our Google reviews.
That's good.
Yes.
So review the work that we've done, or just call 614-353-5088.
Perfect. And your website is very informative, so you do a great job with educating the consumers from start to finish. Once they're in contract, you do a great job of keeping everyone up to date, the listing agent and the buyer's agent.
Yes.
And then you as a consumer, you're gonna get hands-on knowledge and experience to figure out, how do I buy a home? Where do I start?
Yes.
Who can I trust?
Yes.
1993, let's say 93 years experience. You're doing great. Oh my gosh, really good. He's been in business since 1993.
93, right out of college.
Yes, and I met you
And
in
that speaks
99.
volumes because you're still here.
That's
Yeah.
right, exactly.
Knock on wood.
That's right. And you can reach myself, Danielle Alexander, Realtor Coldwell Banker Realty, 614-374-4491.
And you can reach me 614-597-6850. My website www.impactrealestateohio.com.
Wonderful.
You can also check us out on Facebook
Yes.
at Central Ohio Realtors Alexander Team. And I'm proud to announce that we have our own YouTube channel.
Very good.
So Mom and Son Get Deals Done. So you can also circle back and review this broadcast on there. Mom and Son Get Deals Done YouTube channel.
Like, share, and comment,
Yes.
and just keep watching and call us. Contact
Yes.
Joe to get your financing in, get the house purchased, and all
There
in
you
one
go.
happy transaction.
That's it.
And remember, to buy, to sell, call Danielle. Thanks for tuning in.
Thank you.
Have a blessed week.
Thank you, Joe.
Thank you.